I'm very happy tonight to have Jack Tatar to join us to talk about crypto assets. Jack is a visionary in this aspect. But before we start the fireside chat, I want to lay out what Jack and I are going to cover tonight. First, I will have Jack talk about his personal journey briefly. And second, we'll have Jack help us demystify some of the very prevailing narratives, most of them negative about Bitcoin and crypto assets. And then we'll pick his brain how to analyze crypto assets, because he and his co-author created a framework that it's very helpful to understand crypto assets. And if time allows, we'll ask him for his take on NFTs. He is very passionate about NFTs. So with that, and also our conversation will last about 40 minutes. And after that, we'll open the floor for everybody to ask questions and interact with Jack directly. With that, I will start. So Jack, so wonderful to have you tonight with Berkeley Haas alumni and students. I want to, how about introduce yourself first?
Okay, great. Thank you, Coco. Can you hear me okay?
Yes, perfect.
Okay. All right, great. Well, thanks everyone for having me. I really, really appreciate it. It's so great to be speaking to this group, and Coco, thanks for having me and forcing me to do some work tonight. Although it's not work, we'll have some fun here. So a little bit about myself. If you see me at a crypto conference, I'm usually the oldest guy in the place. I've been involved in many different technologies over the years. I actually went to graduate school out in the Los Angeles area, lived in Los Angeles. I went to graduate school at Pepperdine. And I worked in technology for a number of years, actually worked with a company, Avon Products, which isn't around anymore, but we were one of the first companies to use Apple as a corporate-wide provider. And I still have a couple of Macintosh SEs that we were using for testing purposes. I still remember going to a meeting when Larry Ellison was just a sales guy for Oracle and getting Oracle off the ground. So I've known a lot of the people along the journey through technology, did a lot of work with DEC, Digital Equipment Corp, which going back to the mini computers and things of that nature. So I've always had an interest and involvement in technology. And then I spent about 2 decades working on Wall Street. And so my background coming into this was a technology background, but really first and foremost was an investment perspective on this new area, this new technology. So I know we're going to get into a little bit of how I kind of fell down the rabbit hole, because you have to say you fell down the rabbit hole when you're talking about crypto. But a little bit about myself now. I run a venture fund, Doyle Capital. We do early stage investments in what we call transformative technology companies, not just crypto, but everything from distributed computing to 3D printing to ID verification in the continent of Africa. And so we're very involved with startups and founders, and working in an advisory role. And then also, as Coco mentioned before, I'm actually co-author of the book Cryptoassets, The Innovative Investor's Guide to Bitcoin and Beyond, which I wrote with Chris Bernisky, who is a Stanford grad, so don't use that against him. But we wrote this back in 2017, and a lot of the things that are in the book still stand. In fact, we recently got together and talked about doing a second edition, and we decided not to, because there's enough written out there right now that's following the technology so much. But still, a lot of the things that we wrote in the book and put forward, I think, are still very profound right now. So Coco, that's just a little bit about myself. I also started the Forbes newsletter, Crypto Advisor and Blockchain Advisor newsletter, and actually wrote the very first book ever published on Bitcoin back in 2013 called What's the Deal with Bitcoin? So that's kind of a little bit about myself. I live in Princeton, New Jersey, not too far from Coco, actually. So so that's a little bit about myself, Coco.
Thank you. Thank you
Yeah.
for the intro. So Jack and I, we once in a while get together for lunch, sometimes for Chinese lunch too. So that's great. So you don't look like the person who will fall down the rabbit hole of Bitcoin. So when did you come across Bitcoin and how?
Well, I had, as I mentioned, I worked in the financial services industry for about 20 years. And out of that, I built a research business. And we used to do research for all of the big wealth management firms, Merrill Lynch, Payne Weber, not Payne, I'm going way back, Morgan Stanley, UBS, all the big firms. And basically, we were tasked with finding what was the next big thing out there. In addition to the research we did, the one-off research, a big part of what we were trying to do was to find what's the big technology out there for the financial service industry. And one of the things prior to Bitcoin that I got involved with was something called Second Life. And I don't know if anyone's ever heard of Second Life, but if you know anything about the metaverse, and everyone's talking about the metaverse right now, Second Life was not the first metaverse, but one of the earliest and probably the most widely used for a period of time metaverses out there. And having my technology background and everything else, and always looking for what's new and what's out there, we jumped into Second Life, and we actually created the first revenue creation business in Second Life. We had a focus group facility and a research business in Second Life, where we would have people come from all over the world, sit around and type their responses. And we had conducted research for startup companies, for established businesses, and all of those types of things. So I always had an eye on the new technology. And then back in 2013, 2012, we were hearing more and more about Bitcoin. And I had a young associate who was working with me, and I said, look, do me a favor, prepare for me, a couple of pages for a research report on Bitcoin. Well, he went out and he wrote about 60 pages on Bitcoin, and I read it. I fell down the rabbit hole with him, and he and I published What's the Deal with Bitcoin back in 2013, which at the time was the very first book written on Bitcoin, published on Bitcoin. You probably haven't heard of it. It didn't do a lot out there. It's still out there, still available. And for many years, I made it available to people for free, the ebook. But it was very interesting because at the time, there was limited ways to buy Bitcoin and to get involved in the investing aspect of it. So since then, things have changed. And Coco, maybe if I can just share the screen, I'll share with.
Yes, please.
I'll share a couple of slides that kind of go into this. So can you see that now?
Yes, perfect.
That's a younger picture of me, I have to admit. So that's just a little bit about myself. But let me get to this in a second. So at the time, I had written a number of books because we had done a lot of research. I'd written a number of books on retirement and financial planning. And I was writing for marketwatch.com as one of their retire mentors. And when I started to get involved in Bitcoin, and it started to trade beyond Mt. Gox, and it started to be a situation where people could basically buy it with their own funds and go out and if you can take fiat cash and buy Bitcoin, to me, that signaled, well, why isn't it an investment? Why isn't it an asset class? So I started to write a series of articles for MarketWatch on investing in Bitcoin for retirement. And I took my funds and I invested in it. And this is going back to, I think it was 2014 that I started to do this. And I did this for a number of years. In fact, I've written for MarketWatch, I've written for about.com, I've written for The Balance, I've written for Forbes. In the early days when no one was writing about Bitcoin. And my focus was really on, is Bitcoin an investment vehicle? And I went to a consensus conference back when they weren't as big as they are now, back in I think it was 2016, 2015, 2016. And I met Chris Berniske. And Chris Berniske was at the time working with Cathie Wood. He was pretty much the first Bitcoin analyst working with an investment house. And he and I sat next to each other at lunch. And he knew of this company that we had invested in that was in the Bitcoin space. And we started talking. And I said, I know about your writing. And he says, I know about your writing. And I said, I think what the world needs is a book about how to invest in crypto. And he said, yeah, I agree. And at the time, I owned a publishing business. So I had a lot of contacts in the industry. And I said, well, if you're interested in it, we can make it happen. So we spent about a year pulling this book together. And in this picture that you see here, that Chris is up there on the right, and this is myself with a gentleman by the name of Harry Markowitz. And if you know business and you know financial analysis and everything else, Harry Markowitz is, besides being a great guy and a dear friend of mine, he is a genius. He's a Nobel Prize winner in economics. He's the founder of modern portfolio theory, the efficient frontier, all of those types of things. When I was writing the book, I went and spent time with him. He teaches down at or he used to teach down at the University of San Diego. And I went and spent time with him. And it was a humbling experience for me, because if you ever have the opportunity to speak to a Nobel Prize winner and teach them something that they don't know, that was what I did with Harry. And Harry jumped all over it. He was very interested in it. He read through the book. He read through all of our stuff. And I was fortunate enough to know him. And then ultimately the book Cryptoassets, The Innovative Investor's Guide to Bitcoin and Beyond, was published by McGraw Hill back in 2017. And what's interesting is the price of Bitcoin at the time. It was funny because we were waiting to put the finishing touches on the book, and we were waiting for Bitcoin to cross $1,000 at the time. This is what I do right now. So since then, like I said, I do some investing, I do some advising and things like that. But now, for the most part, I do this, and I also do some NFT stuff, which we'll get into later on. So Coco, that's kind of a little bit about the rabbit hole type of thing, but I know you have some other questions.
Sure. So, so in the beginning, I'm sure that, for example, when you brought up allocating assets, some asset, maybe 1 to 3% of one's asset into their retirement portfolio, that was very early, maybe 2013, 2014. And you were just 100% pioneer in that aspect. And Fidelity just brought it up recently. So how did you explain your concept to people, what Bitcoin or crypto asset was, and how did people reaction or response to your idea?
Well, I have this page up here. I was going to kind of talk a little bit about going back to when I was writing for MarketWatch, but you can see the articles that I wrote in 2013. And the focus was, does Bitcoin belong in your retirement portfolio? And you can see some of the feedback I got. I mean, I got called nuts, a moron, an idiot. I think even Ted Turner, I don't know if it's the real Ted Turner, but he called me stupid on there. But everybody jumped all over it. They were like, what are you, crazy? This is nonsense. This is a ridiculous type of thing. And my feeling was that I thought, and after speaking to Mr. Markowitz and spending time with what I knew about asset allocation and all of these types of things, my feeling was that Bitcoin and whatever it was going to evolve into crypto assets could fit what we call the alternative asset sleeve of a portfolio. And an alternative asset sleeve is a small part of your portfolio that's used in conjunction with your equities and bonds and those types of things, where you put a little bit of money in there, a little allocation. And there's the obviously high risk, high reward. And the feeling was, based upon how much you put into it, you find that efficient frontier within your portfolio that Harry Markowitz talked about. But my feeling was that people could take a look at putting Bitcoin in as potentially 5% of your portfolio. I mean, ultimately, there were guidelines for 5 to 15% that we map out in crypto assets. But my feeling was, it's an investment, and as such, because it can be bought and sold, it should fit as a alternative asset. We went through a number of things in the book about trying to evaluate the lack of correlation of Bitcoin to stocks and bonds, because that's really what fits in as an alternative asset. We did a lot of modeling, Chris and I, there, in terms of if it was to go here or go there, downside. But still, there was the belief that a small percentage of that should go into your portfolio, or can go into your portfolio, and still maintain proper asset allocation. So obviously, this is going back to 2013 to 2015, and people were just like, "Are you're insane." What's very funny is, you'll notice here, in May, I added Bitcoin to my retirement portfolio. I actually did it. I actually went in and I said, "This is what I'm doing." And at the time, it was not easy to do. You had to get a self-directed IRA, and I actually worked with Barry Silber and the guys over at Grayscale, before Grayscale became big, to get these assets put into a self-directed IRA. I did that, and then from May to October, I took a 50% hit in my investment. Surprising, you lose 50% if you invest in Bitcoin. I mean, who knew? Even back in the old days, 2013, 2014, it happened, and I lost half of my investment in Bitcoin. And a year later, it was back up and it was still doing well. So that experience allowed me to kind of talk to more people about it, bring it up to people as within the confines of asset allocation. One of the things that we tried to really do in the book was to put this in the confines of proper financial planning, which at the time in 2013, 2014, people were like, "You can't be talking financial planning and bring up Bitcoin." In fact, there are many firms out there right now who still don't agree with that type of an approach.
That's fantastic. So it is, that's just totally your vision as early as just 2013. But is there a way, or how did you explain Bitcoin or crypto to people at that time? Or do you have any good formula or good way to tell? Because I find it very hard, even nowadays, to explain to people who are new to this concept.
Well, I actually, I'm assuming that most of the people on this webinar know about Bitcoin. I'm not going to go through kind of a basic of it, but I will share with you some things that I think are, if you're not familiar with it, are things that will get you familiar with it. And for those who want to explain it to others, these are things that you can use. The very first place that you begin with Bitcoin is the white paper. And the white paper is really the outline of what Bitcoin is. And that was created by Satoshi Nakamoto, who, besides Greg Wright, no one knows who he really was, he or she was, or they were. But that pseudonymous creator put together this white paper and talked about Bitcoin really as a payment process, a peer-to-peer version of electronic cash. And there was actually something out there called eCash at the time. And underlying Bitcoin was the structure of the blockchain. And I think it's very important that we don't lose sight of that, because you'll find people that say, "Oh, I like Bitcoin, but I don't like the blockchain," or "I like blockchain, but I don't like Bitcoin." They're tied together. The concept of the blockchain, the structure of the blockchain, the introduction of the blockchain came from Bitcoin. And it's truly an amazing invention and an amazing technology that we've been given. This white paper was created in October of 2008. Both Chris and I, in our book, we believe that this grew out of the financial crisis of 2008, and it was a statement not only on something new and something different, but really a statement that said this is a better way of doing things. And Bitcoin is software. Bitcoin is code. There's no central authority running it. It's code. Built into the code was the creation that there will only be 21 million Bitcoin. That is it. There's a halving process that goes on along those lines. There are miners who basically put their computer, they download the software, they allow their computer to go onto the network, they run this program, and should they qualify a transaction or build a block that is rewarded with Bitcoin, that's how Bitcoin is created. The way that I think one of the best ways to explain it to people, and here's a chart, how to explain it to your grandparents, but I remember somebody just, Fred Pye, actually, who runs 3IQ, which was the first investment manager to come up to gain regulator approval on a ETF up in Canada. He used to go around and he used to basically take a dollar bill. And on the dollar bill, you'll see a code. And that code is on every dollar bill. I like to say, if you think of your checking account has a number associated to it. Okay, so it's the same thing with Bitcoin. Your wallet, your address is a code of numbers and letters. And that's your private key. That's your public key. Everyone can see that. Everyone knows what your address is. With a checking account, the bank knows the number and your name. With Bitcoin, they don't know your name. You have something called a private key. That private key assures that your Bitcoin address is associated only with yourself. So it's a private key that you keep for yourself. Back in the old days, before we had Coinbase and before we had a lot of these exchanges, people would even write their private key down on a piece of paper and put it in a safe, because that was the way that you could keep your money from being hacked or taken from you through a private key. Now what we have, because we have Coinbase and because we have some of these other exchanges, you no longer have to worry about your private key. Coinbase holds your private key, which is good and bad. It's good for ease, flexibility, but it's bad because you don't have the private key anymore. So if Coinbase gets hacked, you run the potential of losing your assets and losing your Bitcoin, because they, in essence, hold your private key. So it's a very important distinction there, the public key and the private key. To come back to the public key, one of the amazing things about the blockchain and this whole concept is when you have a public key, your public address, and it's listed on the blockchain, every node that's on the network, the Bitcoin network, is holds the same ledger, the whole same blockchain. So every transaction that your address does is tracked by everyone out there. Everyone, it's on everyone's ledger. So when people start to talk about things like, Bitcoin is it's something that money launderers use and all of these other things. Yes, that's true, but people use dollar bills actually a lot more for money laundering and for illegal activity. And the reality is, because of the blockchain nature and because of the public addresses, any assets, any crime that has been created using Bitcoin can be tracked. And we now have investigators who are doing forensic work where essentially every hack that's ever been done involving Bitcoin and involving stealing Bitcoin has been tracked back because of the blockchain and the ability to track all of the transactions on through the public addresses. So it's really an amazing thing, and it's something that people don't really understand. They say, well, it could be hacked and all. Bitcoin has never been hacked. What has been hacked have been the exchanges where people leave their assets. That's what's been hacked. When we had this big hack years ago where Mt. Gox got hacked, that was because people had put their assets and their private key with Mt. Gox. And hackers went in and they hacked Mt. Gox. Now, there's also phishing experiences and things like that where people will give their private key away and then they'll lose assets. But Bitcoin, the Bitcoin blockchain has never been hacked. And I think it's an important thing to understand related to really what Bitcoin is. Here's a little bit about the blockchain there, but there's a lot of things out there to explain to you what the Bitcoin blockchain is all about, what Bitcoin is all about. When you start moving to some of the other assets, the other crypto assets that are out there, most of them work very similar to Bitcoin: private address, public blockchains to track all of these things. But there are some nuances and some differences as well.
Great. So I want to follow up with what you just described, a few things. One thing I like it is you just clarified that actually you can separate Bitcoin from the blockchain, because there are two schools out there. One is Bitcoin maximalist, and the other is Bitcoin is not blockchain. So they only, these two schools, they only want one thing, either Bitcoin or blockchain, but they are not they cannot be separated as one thing. I also want to follow up with one question about Bitcoin. A lot of people say that one negative narrative is Bitcoin is bad for environment because it consumes so much energy. So how would you address that narrative?
Okay, and that's a great question. Let me come back to the blockchain point. Let me see if I have a slide in here. Blockchain technology. I mean, so many companies are saying, look, we've got to do blockchain. We've got to, this was the big thing a couple of years ago. We've got to do blockchain. We've got to put this all on the blockchain. We've got to do the blockchain. We don't have to worry about Bitcoin or anything like that. And we saw this rush to blockchain technology and building things on the blockchain. I'd be very careful of a lot of the things, and I have been very careful when we look at investments in that space about, is it truly a blockchain or is it just a glorified database? And I will tell you that for many people who don't really know how the blockchain works, it looks very similar to a sophisticated database. So database technology that's masquerading as the blockchain, you've got to be careful of that. The other thing that's very interesting, that's very important, is that there are private blockchains and public blockchains. Bitcoin is a public blockchain. That means that there are people, volunteers from all over the world who are running their workstations and creating that blockchain on their own. When you have a private blockchain, where let's say a company says, well, we're going to build a firewall and not have that, well, all of a sudden you have a central point of authority, and which is something you don't have with Bitcoin. So the centralization is always something to take a look at there. Private and public blockchains is always something to take a look at when you're kind of differentiating. Is this truly a blockchain? Is this truly something that's going to transform the way I do business or not? Now, that point about the public blockchain and people running this and people mining it, yes, this energy issue is a major issue. I mean, right now, and this has always been a concern about the amount of energy, because it was built in that just as we use printing presses to print out dollar bills, we're using electricity to create Bitcoin. And when Bitcoin, a lot of people don't, if you go back a few years, we were very concerned about having the ability for 50% of the miners, Bitcoin miners, being in China and Russia. And there they were just putting nodes anywhere. They were no concerns about, renewable energy or anything else like that. They were just kind of, dirty energy Bitcoin. And that still is a big part of it. But I will tell you that when companies go out there and companies start to look at, like we have mining companies like Marathon Digital, Riot Blockchain, who are out there now doing mining in the US, they are looking at renewable energy, not only because of it being good for the environment, but because it is actually cheaper. I remember years ago going to Iceland. And at one point, Iceland was the major country for mining Bitcoin. Now I'm going back a little bit, back to 2014. It was a major country for mining Bitcoin. And the reason was they had these old army barracks that weren't being used anymore. And they would put the Bitcoin mines in there and they would run them off of geothermal energy. And they would just open the window to cool the machines down. So the cost of energy was so low, and therefore people were able to really benefit from the cost basis of producing Bitcoin. What we're seeing is we're seeing more and more people look at renewables, look at that because it's good for the environment and because it's cheaper. The other thing that's important about this energy consideration is that Bitcoin is a proof of work protocol, which means that you've got to prove that your machine is working to basically gain a Bitcoin reward. What we've seen with other blockchains and other protocols, such as Tezos, that's out there, is that runs off of a proof of stake concept, which doesn't have the energy intensive needs that we have with Bitcoin. And we're starting to see that proof of stake get out there because it is a cleaner way of doing business, of creating tokens. We're seeing Ethereum is actually moving from a proof of work to a proof of stake. And in fact, I think today they ran their second test and it worked out. So they will actually be moving from a mining setup where the machines have to keep whirling around to a proof of stake, which is a lot cleaner, a lot less energy intensive. So this point about energy concerns has forced many people to look at renewable energies and look at different protocols that are cleaner energy, proof of stake, and those types of things. And we're seeing that with Ethereum right now.
Mm-hmm. So do you think that Bitcoin one day will change to proof of stake as well?
I don't think so. I don't think so. I think that it's going to stay where it is, but you have to remember something. If you're mining for Bitcoin, it's like any other business. You've got to pay for the electricity, you've got to pay for the mining devices, all of these types of things. So if your electricity costs are low, you would, obviously the cost benefits are there. And what we're seeing is we're seeing renewable energy, some tax credits and things like that are really benefiting companies, especially down in Texas, where there's a number of companies that are starting to really do wide mining for Bitcoin. That are benefiting them so they can stay with a similar proof of work, but they're now using renewable energies and some cheaper energy and things like that. So I don't think Bitcoin will change, but I do think what's going to happen, and in fact, we saw something today, Salesforce has decided to implement an NFT marketplace with their technology, but they're only going to allow NFTs that use clean energy, that are probably proof of stake. You're probably going to see a lot of Tezos related types of things as Ethereum moves to a proof of stake. They will fit in place. But Bitcoin's not really a protocol for NFTs anyway, although there is something called Stacks, which builds NFTs on the Bitcoin blockchain. So we're seeing more interest in renewable energy, greener energy, and those types of things, but I don't think you won't see Bitcoin change. I don't think it can. I'm not sure that it can. I may be wrong, but I don't think it can. So
I don't see that trend either, or possibility either. So let me switch gear to the next question. So in the book, you and Chris put in a lot of effort to create a framework to analyze to analyze crypto assets to help people understand or find out whether something is real or it could be a Ponzi scam. Is there a way for you to briefly tell us what a framework is about?
Well, it's what's very funny is if you pick up the book and if you read the book, and this was something that was very important for Chris and I that we wanted to do. The book is divided into 3 sections. What is crypto assets? Why crypto assets? And then how do you invest in crypto assets? And the why, we talk a lot about it fitting into portfolios, but we do spend a lot of time talking about past financial scams. In fact, many people have brought up that in the book, there's a fair amount of content around things like tulips and different other scams that were out there. And the reason that we put this information there was twofold. One was to warn people of what a scam looks like, because it was our belief, and this has been realized, it was our belief that you're going to see scams pop up with different other crypto asset projects. Back in 2013, there was a handful of coins out there. There were a handful of tokens out there. 2016, the chart I have up here, you can take a look at the top 10 cryptos that are out there. And then you look to the right and you'll see them, and they change. They constantly change. And many crypto assets out there, many projects. And if you see the number there, 19,000, there are probably 20,000 crypto assets out there right now. Most of them are garbage. Most of them are bad projects. Many of them have just been abandoned projects, and many of them are flat out scams. And what we wanted to do in the book is we wanted to point out to people what a scam looks like, for, as I mentioned, twofold: to talk about the crypto scams that might come up, and also to say why Bitcoin isn't a scam. Bitcoin's not a Ponzi scheme. If you know what a Ponzi scheme is, it is not a Ponzi scheme. This is there's not going to be one person left holding the bag here. This is something that goes all around the world. It is not a Ponzi scheme that has been discredited, over and over. One of the things we do talk about in the book is something called the Howey test, and the Howey test was a rule that was put into place to define what a security looks like. And we spend time in the book taking a look at this, and this is something that I think NFT people need to take a look at. The Howey test, there's different criteria in there, and I don't want to go over exactly what they are, but the criteria talks about a profit expectation and all of these other types of things in there. And we wanted people to get a feel for what the Howey test looks like, because it was our belief that even some of the crypto assets that were coming along were securities. They wouldn't meet the Howey test. And it's my belief right now, and if you're getting involved in NFTs, you want to take a look if your NFT project would qualify as a security under the Howey test. And the reason I say this, for those people involved in NFTs, you may be doing airdrops, or you may be putting NFTs out there, and you may say, you buy this NFT and we're going to whitelist you, or you're going to get an airdrop of this or airdrop of that. Those are expectations, almost like dividends. And I think we're going to see, when the regulators start catching up to the NFT space, which they're starting to catch up to the crypto space, they're going to start to see that many NFTs and many crypto projects are in essence securities. And when they're securities, they get regulated as a security, and a lot of people are going to get hurt, and a lot of projects are going to go underwater because of that.
Mm-hmm. So one of the frameworks that you use is the Howey test to examine different projects, and also look into historical projects that people can look at to understand whether one project is suspicious. Is there any more particular tools or framework that you suggest people can use
Yes.
to smell, you know, whether a project is a Ponzi scheme?
Well, you know, I mean, we saw something go on with the with Luna recently. You know, you want to know who's involved with different projects, why they're involved, what is the basis for a project. And in fact, let me just move ahead a little bit, if I could,
Mhm.
Coco. I can always come back to this.
Sure.
Let me. Here's actually this slide is a layout of the different types of crypto assets that are out there. When we created the book Crypto Assets, we were the first ones to define a taxonomy around crypto assets. In fact, I mean, the term was being floated here and there. We put structure to crypto assets, and at the time we defined crypto assets as three different things: cryptocurrencies, Bitcoin, which can be used as a payment process. You had some other ones, Litecoin and things like that. Crypto commodity, which was something like an Ethereum, which is to build a platform on. And then crypto tokens, which were a lot of the newer projects that were coming along that had different reasons for being created. And what's interesting is this is actually a chart from 2018 of a site called Crypto Compare that took a shot at the taxonomy. So this is actually a year after we produced the book, and now they had defined about 20 different categories within crypto assets. And I've seen some recent ones that talk about it even further. And when you start talking about NFTs, I think one thing that's very interesting is about 6 months after we put the book out, my co-author, Chris Bernisky, wrote about the onslaught of crypto kitties, if you remember crypto kitties. And his feeling was that was the fourth category of crypto assets, crypto collectibles. And what's interesting is now we see NFTs coming into place. But to your question about how to evaluate projects, this is within the book, and I think this still holds up. And just as you guys, when you go through your graduate programs and you start taking a look at evaluating businesses and look at businesses, I think you can do the same thing with crypto assets. Is you can, and these projects that are out there, and evaluate them. Why are they being created? Who are they there to benefit? What are they ultimately going to provide to people? And we provided a framework for analysis. And one of the first things we did with the crypto asset book was to put a framework out there to evaluate and to create a valuation method for crypto assets. And that's detailed in the book. But the things that we looked at were, does the project have a white paper? Does it have a game plan? Does it have a reason for being? And this is something you should look at with any project. Just as any business has a business plan, any crypto asset project should have a white paper. It should lay out what they're doing. It should be thorough, and it should be something that can be easily explained. There's enough structures out there for white papers, but if you get involved in a project and you say, "What's your white paper look like?" "Oh, yeah, we got one page. We got a one pager on it. Does this, this." Get it detailed. Get it. Show how it's detailed, and use a lot of the white papers that are out there. The other point is this something that's decentralized? Vitalik Buterin said projects really got to make sure that they have a good answer for why use a blockchain. Is this really decentralized? Because if it's not decentralized, then that means that there's some central authority in there that can either benefit or can disrupt a project. So that's another sure sign for you're going to have a problem with something. Valuation. We talk about a valuation concept within the book about how you can value a crypto based on its utility value, its speculative value, velocity, meaning how many tokens have been released. One thing you want to take a look at if you're looking at projects and whether or not they're good projects or scam projects, how many tokens have they given to the founders and the early investors, and how much control will they have? So all of these things come into play as well. Other thing that you take a look at is how big is their community? and how big and how good are their developers. So, communities right now, a lot of people use Discord. A lot of people are getting people involved. If a project does not have a good community and does not have high quality developers, it may not be a project that you want to take a look at. Similarly, as you evaluate any sort of business, what's the competition look like? I mean, somebody can say, we've got this great idea out there. There's probably another idea that's very similar to it. So is there some comparison to the competition? And then, as I mentioned, that issuance model. What's the rate of supply of these tokens that are coming out there? Has it been fair, a fair distribution type of thing? All of these things come into play, not only when you evaluate a project for being a scam or not, but if you evaluate a project, is it something I should be putting money into? So that may be a long-winded way of answering that question, Coco, but at least it gives you a little bit of an ability to, how to evaluate these different projects that are out there.
This is very helpful, but given there are thousands of projects out there and tokens out there, it must be very difficult to evaluate a project in detail.
Well, it
It's
is.
not just
It is. Yes, it is, without a doubt, because you have to do some work. But the wonderful thing about crypto projects is we're in a time of openness, and people are willing, if they're raising money or they're getting people to invest, they've got to lay all their cards on the table. It's a very transparent environment that we're in. It's not like businesses in the past. It's now that there's a lot of transparency about what a project does. And there should be a lot of framework for how you explain that to the public, white papers, and all of these things that we have out there. Obviously, this is even more detailed than when we wrote it, but there is a lot of information out there. And just like anything else, you need to do your due diligence before you put any money into any of these projects.
Thank you so much. So we still have a little bit time for the last question. That is, so for NFTs, so you and Chris already touched upon NFT before. So do you consider NFT as a new type of crypto asset?
Well, it's interesting when Chris had said, and I reminded him of this when we speak regularly, and I reminded him of saying that about crypto collectibles, and it's really where we are right now. That NFTs are another part of crypto assets out there, because they really are tied in under this umbrella of crypto assets, and even this model that I use for evaluating crypto asset projects, that should be used when you're taking a look at NFTs as well. What we're finding with NFTs right now is so many people are like, an NFT is just a JPEG. It's a Bored Ape. It's something that people pay a lot of money for, and I'm just going to do right click save, and now I've got the Bored Ape there. It's so much more than that. I mean, NFTs are going to transform the way we do so many things now, and 5 to 10 years from now, you're going to be using an NFT and you're not even going to realize it. You're going to be going to a concert and you will have bought your ticket, not through Ticketmaster, but through an exchange. And it's going through an exchange like Coinbase or Kraken or something like that. And it's going to be an NFT. That ticket will be an NFT. You'll be able to save, let's say, the specific one-of-one picture for your ticket. You'll get an admittance to the concert by showing your phone that you own it, and then maybe you'll get a recording of it. It's going to transform most of entertainment out there. But the important thing that people should realize here is that NFTs build on what is known as the smart contract technology. And this is something that's inherent within Ethereum. It's really why Ethereum has jumped out and been the major player in the NFT space. An NFT is really creating a token for any sort of contract that you have out there. If you have a contract, an agreement between you and someone else, that can be an NFT, and that could be easily bought and sold. You will see people buying and selling cars, buying and selling homes in the future without any middleman, and they'll be doing it through the use of NFTs. So NFTs is a very, very exciting space right now. to get back to what many people think it is and where it is right now and what's growing and really kind of what's the low-hanging fruit for NFTs, it are these profile picture projects like the Bored Ape project, where you buy the ape and you have some exclusivity there. You're one of 10,000 people who own this ape. And it's not so much that the Bored Ape is a beautiful thing that you're going to show to people, but you now have exclusivity for events. You're in a club that only you and the other people who own the ape. So there's a utility that's associated with owning that PFP NFT, profile picture project. And that's why they're going through the roof. Steph Curry's buying into it, Snoop Dogg, these things going for $100,000 because it's allowing you to interact with these people. And you're now in an exclusive group. And they're doing a lot of things that are adding utility value to it. They came up and they added mutant apes. So all of a sudden, everybody who owned a Bored Ape now got a mutant ape. Well, the mutant apes are selling in the $10, $20, $35,000 range. So it's like you were just given this money for owning this. So there's a lot of those projects. The other piece of the NFT low-hanging fruit that's out there right now is in the fine art area. And many of you may have heard about an artist by the name of Beeple. Beeple actually sold his NFT for about 12 years, maybe more than that. He created a digital work of art every day, and he would post it and give it away to people. For 14 years, he did that. Then one day he took all of them and he created a mosaic of all of those images. And some of them are just fantastic. He sold that through, I think it was Christie's or Sotheby's. He sold that for $66 million. So that kind of exploded and people started to say, wait a minute, the fine art market is a place where NFTs can go. Because remember, with an NFT, you have guaranteed authenticity of that fine art. You could print it out if you'd like, and put on your wall, or at some point, I think some point down the road, everyone's not going to have frames on their walls. They're going to have monitors on their walls. You're going to walk through a public space and there's going to be monitors, and there will be NFTs being shown in your home and in public areas. And who owns those NFTs? Who says that, if you're at home, you might have a terrific NFT that's worth $100,000. You're going to want to show that there, but you don't have to worry about somebody stealing it. You don't have to worry about it getting destroyed. Somebody gets drunk at a party and they throw a drink at it. You don't have to worry about it. So in terms of the fine art area, it's another place where I think NFTs are creating a revolution here. And because of that, and because of the prices, it's an investment vehicle. I mean, people have always considered fine art as a alternative investment anyway, something you keep, maybe not in your investment portfolio, but something you might have in your overall investment portfolio. Well, if you own a fine art NFT and you have Bitcoin and Ethereum in your account, well, all of a sudden you're able to house that in this one account and track it and buy and sell very easily. And there's no middleman. There's no middleman. Somebody comes along, they look at your wallet and they say, wow, I love that NFT. Well, you want to buy it? Yeah, great. Boom. Sold. Right now, if you want to buy fine art, you have to go and do it with a dealer. So this is transforming the fine art market, but more than anything, it's going to transform the way that we do business, the way the contracts are being handled. So it is something to take a look at for investment purposes, I believe. But it is something to be very, very careful about, because you could end up buying something and you think it's great and there's not going to be a buyer out there. So only buy what you like when it comes to the fine art NFT space. So anyway, I know I've gone a little bit too off on NFTs there. So
it is so exciting. Thank you, Jack. And I really like your NFT collection.
Oh, great.
Yeah. Are you going to write a book about NFTs?
Well, I will tell you that we did take a look at writing a follow-up to Cryptoassets, specifically around NFTs. And I started to write it, and I was working with someone to write it, and the market just changed so much. And I remember when we were writing Cryptoassets, things were happening, but they weren't happening as quickly as they are now. So I don't think it makes sense to really write a book on NFTs. And the other thing that's very different now than when we wrote Crypto Assets is there are so many websites out there and so many people writing and so many people in this ecosystem that you don't need it in a book. Things change regularly. We have good people writing good stuff out there online. That's really what you should be paying attention to. But it is a space that is changing week by week. I can't even keep up with a lot of it out there, but it's a very exciting space right now, and it's something I'm very enthused about, and I think it's something people should, at least if you don't understand it, get to know it, get to see what's there, because I just touched on the surface with profile pics and fine art. There are other things that are going to happen: movies, entertainment projects. So many things are going to be built on NFTs. So it's going to be a huge opportunity for people, and probably for a lot of people in this on this webinar who are looking at different startups and looking to get involved in businesses that are going to transform the future.
It's wonderful. Okay, that's great. I wish I could continue this conversation with you, but we're running out of time. I need to open up the floor to the audience.